down your mind. Slow down these days. Slow down these moments. I'm slipping away. It's a river one way, gone in a moment, set in stone, but still in flow. We're only here for a while. Yeah, we're only here for a while. Yeah, we're only here for a slow down your mind. Slow down these days. Slow down these moments.
Okay, so welcome to the stream, and just in case you are joining this for the very first time and wondering why it is that I play a song like that at the start, it's because it's supposed to remind me about what this particular mission is about. The mission is to trade $100 to $1 million in 100 trading days. Now, if that seems like a big goal, it is if you don't consider the math behind it. When you do consider the math behind it, it still seems like a really big goal. But it is achievable, and I'll maybe get into what we are planning with this particular adventure, if you like, or this particular foray into trading. Now, the idea, of course, to trade this money all the way up to this particular level, $100 to $1 million, is one where there's going to be compounding, a compounding effect as well. And as it works out, the compounding effect that we need to bring into play is basically one where we are going to add about 10% on the account every single day. So not 10%, and just adding on 10, 10, 10, 10, 10. So it's not, it's 100, 110, 120. It's actually 10% more of it each time, and it gets bigger and bigger and bigger. So to give you an idea where it should be kind of heading, if we look at the chart in terms of just moving up where it should be going to right now in terms of like after 7 days. I should have done this math before I came on, but I think we're supposed to be at the end of today. This is not actually where we're supposed to be starting. So we're supposed to start after 6 days, which is where we are now. That number should be actually 1.61 in terms of a ratio. So it's $161 is where we should be after having grown this at 10% a day for a period of 6 days, 5 days. So now that we're finished with the 6 days, 6 days is $161. The seventh day, I'm just doing a little calculation here on my little calculator. Whew, feels a bit bigger now. The goal is to be at least at 1.948. So let's call it $195. So where I should be after 7 days of trading is $175. I am quite pleased to announce that we're doing a bit better than that. Currently, the account is sitting quite pretty at 512. So that's not too shabby. And I'd say, it's a pretty good reason to be, I won't say proud, but just to be happy about things. Now, it's no joke to try to stay on course, I'm going to tell you. To try to keep going and making sure that I'm not going to push myself too hard or push the account too hard. Because there is a very strong desire to make things work, to absolutely just kill it, right? It's really fun to succeed. I mean, it's no way to say it any other way, right? It's nice to succeed. You get a lot of significance as well. But that sometimes means that you want to really accelerate the process. When I say you want, I'm going to say I want to accelerate the process, and I have to work my darndest to prevent myself from responding to those particular inclinations. So the balance currently sits at $512, okay? And that's after trading for 7 days. And I don't want to misrepresent and say that up to this point I have been totally behaving myself. I haven't. And what I mean by that is along the way I have gone outside of the rules. The rules are supposed to be I'm staying in within 5% risk every time I do a trade. And in terms of gains, I'm looking at least a 10% gain when I'm trying to, or at least a 5% gain on each one of the trades that I take as well. So that part of it, I think, is pretty good. What hasn't been as good, actually, is my adherence to the risk level along the way. So what I've done and what I did in the earlier part of this account is I actually kind of cranked up the risk a little bit. And it wasn't the parts that were online, because when I'm trading in front of you, I don't tend to break those rules. It's the fact that I was also able to get to my account outside of this session. And that basically means that at that time, I felt, or at least I won't say I felt, it was just what I did. It was my behavior. I decided that I was going to break the rules because it was opportunistic. And yeah, I mean, which is why this channel exists. The channel actually exists for me to be accountable to myself. And the trick is, by putting it out live on YouTube, you get to see the other side of this. So you're actually watching in while I'm doing this. And if there's just one person who kind of knows what I'm doing and see what I'm doing, I get a little bit more inclined to stay within the rules and to stay calm, as the music that I have chosen to be the soundtrack of this channel, slow down. It's all about slowing down. And yesterday was quite interesting because the review included me looking at the number of trades that I had taken in the first 5 days or 6 days of this particular adventure. And I was honestly shocked by how bad it was in terms of number of trades I took when I was off screen, right? When I wasn't streaming, and it was actually very good in retrospect to see that. I was really shocked by that. I realized that the impact of of monitoring yourself and what it can do for you as well. So that's the important thing which I had not been doing and I should have been doing. So we're back to live trading right now, and let's do a little bit of analysis of the market so far, and of course a review of the rules that I have for myself. The rules are basically that I want to make sure that I'm going with the trend. All right, always has to be the agreement of the trend on at least two higher time frames, right? So that whether the trend is agreeing with my what I'm looking at. On the daily chart, it's still looking a little bit like it could be an uptrend because it hasn't really fully broken down, right? So up here, let me just take away that. Up here, where you can see this price has come back down, it actually hasn't broken down past the previous low. So technically speaking, it hasn't really pushed down yet, although it's not staying firmly on the uptrend as we would expect it to be if it was going to keep going that way. So on the daily chart, I'd say still a bit of an uptrend, although threatening to be a bit of a downtrend. On the 4-hour chart, it's arguable that this is looking a little bit more now like a downtrend. So the most recent kind of levels that we have actually sort of pushing in a downward direction as well, right? As evidenced by, first of all, this nice strong push here. This is the push over these many hours here. Each of these bars, by the way, representing 4 hours, and how little basically it has been able to go back in the opposite direction in a very similar amount of time. So that's the big push in that. This is 1, 2, 3, 4, 5. It's a 20-hour period. And this is 1, 2, 3, 4, 5, and another 20-hour period that's basically kind of forming here. So you can see that movement down has been much bigger than the movement up. And so that, in combination with this bigger trend like this, makes me feel that the trend on the 4-hour chart is on the way down. On the 1-hour chart, what's happening? Well, that still gives me the feeling that this is a downward moving chart, especially when you look at this particular pattern here. This is where it's pushed down quite hard as well. So there's a double top with a nice wick as well. So I am pretty much in the market for a sell. I'm trying to get back into this sell and see how much of a position I can take and see whether I can find myself a place where it's going to be a good trade. The only trick or only hassle right now is the amount of risk that I am going to have to put down to enter a trade here. And this is because technically speaking, when I look at this particular pattern, technically speaking, the stop loss is actually all the way back to here. I don't know whether you can see the numbers on screen, but that's basically 1,000 points. So 1,000 points is pretty hefty. It doesn't mean that I can't play. It just means that I have to change the level of risk in terms of the lot size so that it becomes compatible with my acceptable loss. And remember, I'm saying 5%. So 5% of $50 is $25. And to translate $25 into 1,000 points, this is going to take some live math, which is going to be fun. It's basically going to take, I think, 0.02, 0.02, 0.03 is going to be a bit too much. 0.02 actually is going to be where I'll still remain within the limitations of the trade, so I don't take too much risk technically. So worst case scenario, if I do a sell at this particular point and the price goes all the way back this particular point and goes all the way back here and takes out my stop, then I'm just going to risk about, I think if I put down 2, it should be about $20 worth of risk, right? And that's going to be well within the 5% risk of the overall account with this trade. And of course, you only want to get into it when it has some real potential of doing what I think it will do. When I look at the chart as well in 15, though, I'm not getting exactly what I would like to have to confirm a sell. Right? What I mean by that is I've got, technically speaking, a price that still hasn't quite come down yet, still going up. And actually, even the highs are still going a little bit higher as well. So they haven't been actually coming down. So I don't have a confirmation per se on a downtrend. Although in terms of where this market seems to be inclined, if you look at the fives, you can see it's got a lot of energy pushing down right now. But as I said, what we're looking at here is what we're concerned about as well. Is the fact that it's gone a little bit higher instead of down. Because down, if it was a lower high on this side, that would be something quite useful. But for now, that is not gonna work. So we just wait and we sit on our hands. Now I know this sounds like a really frustrating sort of thing. Why don't we just get in here, even though it looks pretty much like this this trade is probably gonna go in our direction, right? If you look at where everything looks, there's every indication that this is going to work out as a trade for a sell, right? And that is almost true. There is a little bit of indication that it might not as well, right? So that is an engulfing bull candle from before, and that's pushing up, and that shows you, and it went pretty high as well. So this is where it went up to as well. So something to consider. Of course, the next thing that happened there was this big engulfing bear candle, which pushed it back down again. So it's not completely home free. It's from a higher position. It hasn't come down from a lower low, a lower high, which would be a nice place to take a trade. So we're just going to have to have a look at the nature of the trade from now. Also, in terms of time today, we don't have as much time because I have client meetings for various things to look at. Let me just check here. So this is kind of an odd arrangement that if you're a subscriber, I guess you've already kind of known what's going to be, you kind of know already what's going to happen on this channel. So it's not new to you. But if you're not a subscriber, so this might be the first time you're popping in, you're going like, this is the weirdest channel I've ever seen. It kind of is. It's run by me, someone who actually does presentation coaching, storytelling coaching. It is, I'm an MC, a voiceover, so I do all that kind of stuff. And I also trade. And I'm an impatient person. And so what happens when I usually trade is besides making all the good moves, I tend to be impatient and I take extra large risks, which have the potential of bringing in good returns. But as anyone who's been trading for a while and understands trading knows, the risks you take, the size of risks you take every time is actually what is going to compound as well. So you've got the wins compounding to help you on the upside, but it's the losses that are going to compound that actually reduce your ability to be very successful. So, speaking of success, currently, like, as you can see, the balance is 512 after trading for 6 days. We're starting off day 7. That is actually significantly ahead of the growth curve, which should see us at $199 after 6 days of trading. We're at significantly better than that. So again, if we hold the course and maintain the risk, we should be able to amplify this, right? So yeah, so having a look back at this again and saying, well, would we have taken a sell? Well, it looked like it, right? Like I said, it indications give you the feel that, oh, it looks like it's quite possible, and big story as well. It does look like it's coming down, right? And what I'm doing at the same time also is just being aware of the story in the shorter term. And the story in the shorter term is actually one that looks a bit more like this, right? The shorter term story actually is a push up like that. So it's a higher low, it's a higher low, it's a higher low, and also a higher low here as well. And all this is happening on the H1 levels, which means it's a pretty significant level, even though it's not as big a push as all this movement down here at the same time. It is still a continuous movement like that. So that's one aspect to consider, which is that it's moving up and been moving up. One other thing that we're doing, of course, is to consider it in context of the big picture. And the big picture right now is that it's coming to this area here where there's been a switch over in levels on the H4 chart. So where's that level we're talking about? It's here, right? So there's a big change in levels as well. These are all significant levels, and we look at what happens in relation to those points in the current price like that. And that's usually a place where something's going to happen. And if it's the appropriate thing, then we take the signal and we might go and do a sell there. So at this point on H4, there is no clear reversal. So we'll have to accommodate that or take that into account. But if you look at H1, there may be more of a story there already. So on H1, this hourly chart, if you look at the bodies of the candles, this is what's happening. This is actually the shape of things at this particular point. And because it's H1, I'm going to say it is a significant enough level for us to pay attention to. I'm looking at M30, which is kind of the middle, sort of in between that those intervals as well. You know, not a bad double top when we look at the bodies of the candles there. So double top, and for H1, it's kind of on the way down. I am quite, for want of a better term, bullish about a sell, which is the opposite, right? So I would say only on the lower time frames, like the M5, is where we have a little bit of a discrepancy in terms of how high it goes. It's like it actually does go a little higher here when you compare it with over here. So that's the discrepancy that I become concerned about. So what I'm looking for is a good reason to sell, because I have several stories running at the same time that seem to be in support of each other. Currently, the price is actually at that H4 line, which, just as a reminder, is a significant line. And if we see something that basically confirms strongly a nice push down, then it's something that we can consider. And I should also remember to reduce the size of risk, because we don't want to go too high with that. And what I'm going to do is adjust the risk based on what we see the price action doing as well, right? So there's kind of a calculation here that I'm going to base on the fact that in the last half hour, the price hasn't actually gone higher than this level here, the wick of the previous candle. And so if I see something that kind of says a sell is to be considered, and this is where this might show itself here as well. If this pushes down a bit more and closes nicely, there's a bit of a, looks like a bit of a movement or pressure below the line, and we might do a sell. But we want to see what happens once the candle closes, and that's the challenge when it comes to trading as well, especially in the strategy that we are looking at. When I say we, it's me under the guidance of my mentor. We have to wait until the actual signal shows up, right? Because what we are interested in is actually taking action based on evidence, not just the feeling that we have about a particular trade or where the market is going. And it's actually a very difficult thing to not trade based on the feeling. And here's the good news. Trading based on the feeling, usually not a good thing. Because usually what happens is we're bringing our biases into it and we're doing things despite the evidence that we see as being obvious in the moment. So what I'm going to do now is going to do something which looks like it's going to be nuts, right? So there isn't a huge amount of evidence, but what I'm going to do is take a very, very small risk so that if I am wrong with this, it's not going to cost me dearly. It's only going to be a $5 trade, which is a much smaller prospect than putting a stop loss based on this full amount here like this. So it's a $5 risk that I've taken, which is essentially just 1% of the account on what looks like to me something that is about to make a bit of a push down, right? Just simply because of this little pattern here, where we have, I mean, it's not very clear, but what I'm seeing in this is a kind of a head and shoulders pattern, and I know, yep, it looks like a stretch. Double, it's either a head and shoulders, triple top, whatever it is. That's the possibility at this particular stage. If it holds and continues to hold down, I might double up the position. Otherwise, we'll see whether we stay in this particular trade to see how this turns out. So to be fair, there's not a huge other reason to be looking at the sell yet, because we still have these levels being pretty much the same level as well, and that's a strong support kind of a pattern. You're actually seeing where the support is in the market. But again, it's always going to be about the combination of all the different clues that come along, right? So the plan right now, or where it sits, is I've got a 1% risk trade where I am seeing that it looks like it's going to be pushing down. So this is where we are. And that very familiar feeling as well when trade begins to go in your direction, right? You go like, okay, I wish I had put more on the trade. And that is the very instinct that I should try to avoid. Now, okay, so now we talk about something that's interesting about this is like, where do you think this could possibly go, which is realistic as a target, right? So this target right now, the bottom of the price before, is actually the reasonable target in terms of the position in the market that we took, right? The probability is pretty high that it'll push down, at least get to that level before it does any kind of pushing back up. Okay, that's where we are in terms of this particular trade or possible trade. But I'm also looking beyond that, as in I'm looking to see whether we can get back to the low of today. And the reason why I think there is a possibility of that is because of what the market seems to have tried to do and failed, right? So what has the market tried to do and failed, in my opinion? What I've seen is it did a push down and then it went up a bit again and pushed down, tried to push up again, but it went down. And now it has done quite a nice strong push like that. So it looks like almost like a kind of a trend that's going up. And it looks very much like it is on the way up. Except what happens after this is that it gets pulled back down and actually tries to go a little bit further. But what it looks like is the bears are still so keen on bringing this price down, as despite the fact that it's gone up and gone above that previous level, it actually gets pulled back down again like that. And so that just gives the impression that there is a part of the market that's really working hard to try to bring it up and win on the bull side. But the bears still pretty strong. They're still holding this price down. So it went all the way up into that high and actually sold it down. So that's why we're looking at it this way. Will I be right? I don't know, right? Can still see the remnants of the fight as well. You can see that there's a push, and this is coming up in the, you can see that, like here's where it's pushing back up again. Little fights like that. So this is where I have to hold myself down and say, okay, I'm not going to take too much action, not try to well, not jump the gun, basically, right? So currently 1% risk on the table. I am, and again, tempted, because we are staying within the confines of the trade. I am keen to layer on another trade on this at this level. So it's right up there, right? And you're going like, well, that seems like you added on when things weren't really doing well. So what I've done there is I've taken a trade where I put 3% or a $3 risk on this, right? So it's a really small risk on a 0.04 lot size. And why that is any kind of significance is that it basically means that I'm still taking a trade on the same thesis that I had before, and because I hadn't taken a very large risk on that particular trade the first time round, when I added this on, basically all I did was add on about 0.6% risk, right? So total risk on this trade currently is about 1.6%, and that's not huge. And so if we get hit, it's going to take us down by just a little bit like that, right? Now, if the trade goes where I think it can, if I think about this sort of like medium to long target there, it has the potential to raise the overall account by almost 10%. So if you think about that, it just with 1.6% risk, that's the upside. It's not a bad deal if we can get it, right? So again, all this is only because of the small risk that is currently being taken here. So if you look at this, the higher sell here has a risk of $3. The lower sell here has a risk of $5. So it's a sell with $8 of risk to make potentially almost, it's about $60. So if you're profitable, so when the circumstances are right, you can take a really small risk like this, and it's not going to take a big chunk out of you in case you're wrong. So in this case, I'm going to say I don't know for sure. It's looking a little bit like I might be wrong on this trade. I'm satisfied that it's a safe enough entry on a trade for this amount of risk. I'm pretty okay with this. I'm tempted to give it a little more room just to make sure that I don't get taken out by the stop, but that means I'm beginning to increase my risk as well. Um, and the reason why I really shouldn't is because there is a thesis around all of this that needs to hold if I'm right. Now, there is also the fact that there sometimes will be a real sudden push where a quick rejection happens. It pushes up, it tries, it does a retest, and then it takes out the stop and then goes down. So there is also that. So what I'm going to do is I am going to just have a look at the levels, look at the numbers, and think whether or not I want to add a little bit more risk. How would I add more risk? Well, if I expand the stop loss, it means that if this trade goes wrong, I will lose that amount of money on the risk on this particular trade. And again, I got to make a little bit of room for things like slippage. So if you're new to trading, slippage is basically the difference in the price that you want to trade at and the price you actually get. And what happens with that sometimes, especially when a market is moving very quickly, and that happens, you know, there are many times in a market where the market just does a real move very quickly. The orders go in to sell or buy or whatever it is to close your trade, and if the price has moved too much, you're gonna get a difference in what you intend to sell or buy at and what you actually get as your deal, and that is called slippage. Slippage can sometimes go in your favor, and other times not so much. All right, so looking at this right now, again, sort of threatening, but at the same time, no full conviction. I was talking to somebody today about hedging as well, and the temptation right now is to go like, when I hedge, I'll try and hedge this. But I feel that it may be trying too hard to try and manage a trade where already we have this trade, I think, in a good place where you've got 1.6% trade, 1.6% risk with a pretty good, I think, a position in the market where it looks pretty much like it's hitting a level where uh, it has a potential, strong potential for turning, and we managed to get in with a low level of risk. What isn't looking as great as it did previously is the fact that the price has managed to come a little bit higher than this level here. But you can see efforts to push down have come in with engulfing bear candles coming up as well. So it is a little bit of a monstrosity right now. What I mean by that, these would be ideal if these were at a lower level. So, I mean, like when you compare that to this level here. But what is kind of nice is actually when you compare it to this level before, it's actually looking reasonably okay. And this is all, of course, reliant on what happens at this particular point here. Does it go down? Does it push down? Does it stay down? And if it does, that structure is going to be useful to complete the sell story. The other big challenge is what happens if and when we're wrong. And that is frequently where I end up off the reservation, where I'm trying to make a trade work. And I'm going to use that same word. I'm actually trying to make a trade work when what I should be doing is just positioning the trade and seeing if it works. What's the difference? I don't have a control. I can decide when I open a trade or close a trade, but I cannot decide at all what the price is going to do. That's something that is it's outside of my my abilities and anybody's anybody's ability. If you're a retail trader, if you are a market maker, it's a different story. You actually have some influence, maybe a lot of influence, on how the market performs. Yeah, but for now, this is what's happening. There's nothing much to add to this right now, except a few more words as I'm just babbling on. So I'm gonna just leave it quiet for a while. My girls have just come back from a holiday, so I'm gonna go outside and say hello to them and be right back. I guess what I could do is play some music for you while I do this. So let's yeah, let's do this. Put that on and maybe play some of that music. Ta-da! Won't play too loud. Here we go. So be right back. Fading on.
Slow down your mind. Slow down these days. Slow down these moments. I'm slipping away. Time won't you wait for me? Time, she never waits. Oh, please wait for me. It's a river one way, gone in a moment. Set in stone, but still in flow. We're only here for a while. Yeah, we're only here for a while. Yeah, we're only here for a slow down your mind. Slow down these days. Slow down these moments. I'm slipping away. Time won't you wait for me?
Ooh. Here we go. Okay, so back live and things are looking quite good. So that's got us into a trade which might turn out well. I think it will. Here we go. Doo-doo-doo-doo. So the girls have come back from Japan, and I think they're quite happy with what we've managed to do in their holidays. So that's always nice. But yeah. So this is where we are. And just a reminder, just in case you missed the disclaimers at the end, again, all this is not advice to trade. I'm not a financial advisor, so I'm not going to be giving you any kind of qualified advice. I can tell you what I do. And as they say, do your own research, all that kind of stuff. This project is actually based on what is seen commonly as an impossible task, right? So if you were to get onto ChatGPT and like I did on DeepSeek as well, and literally I went on all those platforms to run the question, said, would it be what would be the plan to trade $100 to $1,000,000? I didn't even say 100 days. I just said, $100 to $1,000,000. And it came back to me with the more or less same answer on all these platforms. On DeepSeek, I was talking about doing it over 100 trades. On ChatGPT, I just talked about just the idea of trading 100 to 1,000,000, and it basically said not possible. Said unlikely. Talked about things like having to rely on lottery level luck to succeed. And if I had taken that as what was the truth, even though mathematically what they were saying, all those things that they were saying about the ideas of the trade actually held water, well, basically, could be true, this wouldn't be possible. And it's also, of course, not possible, based on what they're able to base their knowledge on, or based on what they have the research on. So, ChatGPT doesn't actually know anything. What it does actually know is what it can seem to know is what the opinions that have been expressed before have said. So, in a sense, the algorithm is able to understand the language of it, and it probably has heard the idea that it's not possible to do. And because of that, it's biased towards proving that it's not possible to do, right? And the main reason why it is possible to do is because you can actually have lots of leverage without exposing yourself to lots of loss. And that is something that many traders don't think about. How you can get a lot of leverage without exposing yourself to a lot of possible loss, or therefore the risk, right? And how that manifests. There's a big word for you, manifests. And how it manifests basically is this: you have to make sure you don't fully leverage yourself. Most of the calculations that I saw with regards to the trade of going to 100 to 1,000,000, why is impossible, is because every single one of those trades were pretty much fully leveraged. And a fully leveraged trade is great on the upside, because you think about how much of the upside can you get? Well, if it's leveraged 10 times, then you get 10 times. If it's leveraged 100 times, then you can get 100 times. In the case that I have right now, it's 1,000 times, right? So every single change in price it's amplified, can be amplified by up to 1,000 times. So if I were to take a single lot, right, in a gold position like this right now, I could do it for, yeah, I could actually do it, I think, with is it $300? Yeah, I think $300 with just $300 I could take a position, a full position in gold. And I've got to check on the math on this. I'm actually making a mistake with this. With just $3, I can actually take um, 0.01 lots. Okay, anyway, I'm not doing very well at this. The idea basically is this. I can take a much larger position than I would if I just had this amount of cash, right? Um, and it's not necessary that all of it be at risk, because if you take a small enough risk, like for instance, to give you an idea, with the balance that we have right now, that $512, I can't remember. Yeah, it's $512. I could easily buy one lot, or slightly more than I could even go 1.5 lots of gold, and I would be able to trade that. And if the price goes up, it would change my balance significantly. Or the price goes and moves in the direction of my trade, it would change the balance significantly, and that'd be great. But it'll also have the opposite effect if I'm wrong. So as it goes against me, it would feel quite unpleasant. And to give you an idea, that even though I can afford, like the big spender that I am, even though I could afford about 1.5, maybe 1.6, even, maybe a bit more in terms of lots per trade, currently what you have before you is actually 0.04 times 2, so 0.08. So take that on board and recognize how much smaller of a position that we're taking than fully leveraged, right? And the reason's very simple. When and if trades go against me, the loss per trade is actually going to be quite small, right? Correspondingly, the gains are also going to be quite small when you look at it just in absolute numbers, right? Like for instance, right now you're 512. If I make $20, that seems like not a huge amount of money. It's $20. But it's not an insignificant amount of money as well. So just to round things off, if I made if I made $25, I would have grown that account by 5%, and I would have done that in this past hour, basically. So let me just check this out. I'm also, by the way, just waiting on um, a possible meeting that may have to happen at 5 o'clock. And if that happens, I'm going to have to run. But for now, let's see, this is going to be ironically, right? So I'm looking at something right now which I can't tell you about because it's a non-disclosure agreement. Here we go. Oops. Here we go. If this were a Mission Impossible movie, someone would be zooming in on my eyes to see the reflection of the document and seeing what I was seeing. Here we go. And again, as I mentioned on a few other of these live streams, I like trading because it's something that can happen. Oh, okay. All right, guys. So here's what's happened. I have a client that needs me to be online with them in just a few minutes. So I'm going to have to take this stream offline because it's using the same equipment that I used for that particular meeting. So at this point, I am just going to end this particular session as it is. I might bring in the stop loss so that worst case scenario we don't lose money on this trade, but hopefully it pans out on the right side. So we'll see you later on for part 2 of day 7. Thanks for being here.